Hi, it's Linh Podetti here. I'd like to introduce you to my guest today, Kathy Svetina, the founder of NewCastle Finance, a company offering fractional CFO services to women-owned businesses. She is going to help you get clear on your numbers and your financial strategy so that you can feel confident when you're making good decisions that result in a healthy, sustainable, and thriving business. Hi, Kathy. How are you today?
Hi, Lynn. I'm good. How are you?
I'm good. I'm so excited to talk about this topic because it's a topic that has been challenging for me when I first started my business, and I've got better over time. And I know at the end of the day, we're all in business to make money. And if we don't manage this area, it's just sucks the life out of us and we never can feel like we've reached the destination. And so today let's talk about how to actually manage your finance properly, right? From someone like yourself who's got so many years of experience. Let's start with what motivated you to start a business and focusing on helping people with their finance?
Yeah, that's a great question. So I was in corporate finance for about 14 years. And the thing that always really bothered me was that large companies have like an army of people that really take care of them. You have the tax department, you have the analysis department, you have the treasury department that take care of the cash. And when you go into like the small business arena, no one's really doing that for them. I mean, you have the accountants and the bookkeepers, but no one's really like looking at like from the beginning to an end and be like really strategic about the finances and thinking about what are we really doing? Does it really make sense? And where do we want to be in the future? And how do we get there, right? So those are the type of things that really bother me that small businesses don't have. So I said, I want to go and try to help that.
Yeah. And I also read that you focus on women businesses. So tell me why, the motivation between, your passion for women.
Yeah, I only service women-owned businesses. And the reason for that too is because, when I was in the corporate finance and as you go into these like levels, the higher the levels are, you kind of see that there's not a lot of women there anymore. Mm-hmm. It's mostly men, it's men dominated. And especially in finance, there's not a lot of women there either. So I really wanted to because finance is such a personal thing, especially in the small business arena. I really wanted to work with women because you are as an advisor and someone who's really there with them. I want them to have someone that they feel comfortable with and not just a guy, fortunately like mansplaining them or whatever. I really want to give them to that option that they have someone that really understands them and they're another woman and that it can guide them. So that was my goal of servicing women-owned businesses.
Do you think that it's kind of a common thing that or a typical thing that men are better with numbers and love numbers more, and women there's something that stops us from wanting to know more about numbers? Like, is there a kind of like gap and reasons why that you've been able to witness?
I think it's interesting. When I was thinking about this, I think with women, it comes, at least here when, it comes with how you grew up and, there's a lot of like how family thought about money and what you saw your parents, like if your parents were married and, mom just kind of let the dad do the things, right? I mean, there's a lot of like family relations that goes with the money. So, but when it comes to like running the business, you are the boss, you have to know the numbers. And what I noticed that with women, there's this just kind of like overwhelm of, I'm not really understanding it. I don't know where to get it. It will take care of itself. I think with men is mostly, and I don't know like how to explain it well in a term of, I think with men is because they've been more like socially groomed to be better with numbers. It's better for them, right? It's harder for women. I've seen it like it's really harder for women, and to get that help, that's going to be able to explain them the numbers and what it means behind it, right?
Yeah, and I guess this is just my guess here, but men have always been the breadwinner. Men, their way of contributing to the society or how they look good is through how much money they have, really. And so money is kind of a natural thing. Women is kind of in the past. It's always been about looking good, taking care of your kids, and that's kind of your contribution. So I think men kind of in general, in generations, they have that kind of advantage in that they just around. That's my guess. Anyway, now let's talk about small businesses. Like what is defined as small businesses? Because I'm not quite sure. Sometimes people are saying the number of staff, the number of revenue. Can you share a little bit about what is considered as small businesses?
Well, the small businesses, at least in the US, are considered businesses that have less than 500 employees, but that is such a wide range, right? The small businesses that I help are, like I said, women-owned businesses, and they're making between $1 million and $10 million in sales already annually. And that's the time when the business gets a little bit more complex, so that you can just look at your bank statement and say, oh, I have the money or I don't have the money, right? There's a lot there, but it requires more planning than it previously did. And then, when you go from 10 million to 20 million, 30 million, 50 million above, these are, that's when the business changes again and the needs change again and the people that you employ change again as well. And it's all, you can look at it revenue based or employee based, but like I said, it's mostly businesses are between, 0 to 500 employees.
Yeah, so 1 to 10 million is probably still considered a small business there. So what do you see as a common problems that they face in that stage of business?
Lack of planning. That's the big one. Like I said, it's just looking at the bank statement. It's not enough. It's like really thinking about, what am I doing? Does it really make sense? And how can I ensure that my business is going to be good for the next, 3, 5 years, 10 years down the road versus just what I'm doing now? And the other piece that I really see business owners struggle is that they're so embedded to working in the business that they're not working on the business, like really taking a step back and looking at that strategic 10,000 foot view of, like I said, what are we really doing? And does this really get us to where we want to be? And of course, where do we really want to be, right?
Yeah, you're right. Because I remember, when I first started, you're right. I just look at my bank account. I know what's coming in. I pay the bill. It just goes with the flow. And as I grow, I obviously, now care more about the numbers. But when you're saying that they don't plan as much, like how do I plan? Can you go into deeper detail about how to plan?
Yeah, and before you do any type of planning, there has to be a foundation for that. So that means that you have to have the numbers updated. You have to have a bookkeeper. You have to have an accountant. And I don't work with businesses that do not have that foundation because we cannot do the planning. It's kind of like building a house. You're stacking it up, right? You have to have that foundation. And that means that you have to have the numbers in whatever accounting software you have, QuickBooks, Xero, whatever you're using. They have to be updated. They have to be updated on a monthly basis. So after you have all of that, then you can do the planning. And the planning, there's 2 ways to plan. The first one is a short-term planning, which are the budgets. So you're looking at the next 12 months and trying to figure out how much revenue we're going to bring in, what are the expenses going to be, are you going to be hiring, and that sort of stuff, right? Figuring out the budget. And then the second piece is the strategic planning. This is like really the high level planning. You're planning the business 3 to 5 years down the road and trying to figure out, am I going to have new offerings? Do I have to hire people? Because usually, when you're like really pivoting and trying to have new offerings, you're not going to find the right people just right on the spot, right? You have to really plan for it. What are the type of people that I need? How much you're going to pay them? How much is it going to cost? Does it really make sense to do all of this, right? And when you're doing all this plan, you're basically envisioning your business in the future on the spreadsheet or whatever you're doing, whatever you're using, and trying to figure out, does this really make sense, the path that I'm going to? And that's really the advantage of planning. It's not trying to predict the future because no one really understands how the future is gonna, we don't have a crystal ball, but it's really trying to see, does it make sense where we're going? And are there any traps that we might fall in? It's just like when you're driving down a road, right? And there's a construction there. If you know that before you get to that point, you can pivot around, you can turn around, you can take a different road. And that's the same thing with planning too. You want to see the potentials of what might go wrong so that you can prepare for it, right?
Yeah, that is so true. And also the other thing that I can relate to is kind of, as an entrepreneur, you're always so ambitious and you throw numbers out there. Like, next year I want to make $5 million. Next year I want to do this. But without planning, you kind of don't know how. And also, are you even prepared for the growth? I know in one of your ebook, which is on your website, which is like 5 common mistakes. And I think one of the parts did mention that, are you ready for that kind of exponential growth, because you can't catch up with delivery and the cost goes up with it. So let's talk about the experience people may have if they're lucky enough to all of a sudden attract 100 new clients tomorrow.
Yeah, and that's another thing I talk about too, is everyone seems to be chasing this revenue. I want to make $10 million, $5 million, which is great, right? It's a great goal, but understand that with that type of revenue also comes the expenses with it. And not only that, and you're an expert in this, is having the systems and the processes and training the right people and hiring the right people, making sure that you're efficient as well. So if you're just chasing revenue, if you're making $5 million in revenue, great. But if your expenses are $5 million and $1, you're not making any money, right?
Yeah. So it comes down to profitability. So what's more important? Obviously, it's straightforward now, it's profitability. So what are the ways that we can increase our profit? Because at the end of the day, like you said, revenue doesn't really mean anything, but it's good for the, I guess, pride, hey, I have a $5 million business, and don't tell anyone what your profitability is. But what are your tips on increasing our profitability?
It depends on what type of business you have and what industry you're in. But the first thing is looking at your expenses, like really looking and knowing what are your average monthly expenses. It's gonna go up and down based on the business, right? But what are your really average expenses, and knowing what are your variable expenses and what are your fixed expenses. Fixed expenses are the expenses that if someone, you had no customers tomorrow, but you still had to pay your rent, your employees, your insurance, whatever it is, you still have to pay those. So those are your fixed expenses. In the variable expenses, there's anything that's not related to those fixed expenses. For example, if you're selling, let's say, some product and you have to buy the product, that would be your variable expenses, because the more product you're selling, the more expenses you're going to have with that product. So that's a variable expense. Really understanding your monthly expenses and what's variable and what's fixed. So that's really going to help you with profitability and seeing what you need to change. And the other piece is too, like really also understanding how much, not just how much profit you're making, but also how much cash you're bringing in, because cash is a lot different than profit. Your customers might be paying you on, like net 30 or net 60. So there's a huge delay between when you're actually sending the invoices to when you're actually getting paid. And that might be a problem for you if you're not aware of that. So really understanding not just the profit, but also the cash coming in and out of your business, that's really important too.
Yeah. And one of the year I actually really hit my profitability because I kind of hired more than I should hire. So can you talk more about, I guess, your help in helping people to just identify when is the best time to hire or prepare for hire?
So what I like to tell people is before you hire, do a talent inventory. Talent inventory of a business, meaning the people that you have right now, what are the weaknesses? What are the strengths? What are some of the things that they like to do, what they don't like to do, what they want to be doing? And then look at your business. Where do you want to be? Where are you now? And what type of roles do you really need? What do the people that you have right now need to be doing? And then trying to figure out is how do you combine those two? Because it might actually turn out that you don't have to hire people. That if you just change some of the processes, the systems that you have, you might be able to automate something as well. And you don't have to hire 2-3 new people to support that. You just have to use the right people in the right places, and then put the systems and the processes or automate some of the other stuff that normally you would want to hire for. But really taking an inventory of what is happening in your business, what some of the people that you already have, and what can you automate before you hire new people.
Yeah. And so my problem back then was like, I kind of knew I needed them, and I know that they're such a good asset. So I'm like, you know what, I'm going to hire and hope that they're going to bring a better return on investment, because obviously I haven't got these roles filled, but I know it's for the future. Like, do you think it's a common mistake that people make where they're kind of like hoping to invest in this for the return on investment before they have the money? Is that common? Yeah, because that's what happened with me.
Most what I've seen with people is that they kind of drag their feet a little before they make an investment, and they wait too long until they're like really high in the water, especially when it comes to people. And that's not a good place to be either, because then you're making hiring mistakes. You're just trying to hire people to fill out that void without really taking an inventory again of, do I really need to hire these people? I'm up to my neck in work. I mean, what should I do, right?
Yeah.
So really understanding that, and that's where it comes to, when you're growing too fast, that's the place where you really don't want to be, is that you have now all these clients and all these customers, and now you have to go and figure out who's going to service them. And you hire people that are not a good fit for you culturally and for your company and for your pocket either, because you're just trying to get things going and just, patch things up. So don't patch things up.
Yeah, love it, love it. So tell me more about CFO role, because I know that, look, accountant will do your tax, and even in Australia, they submit your GST tax quarterly and all that. Your bookkeeper kind of does the admin, making sure the reconciliation. So what would be a fractional? I'm guessing it means it's part-time casual hours that you're working with the business. So I guess let the audience know clearly, like, what would be part of your role, because a lot of things you shared, for me, it sounds so valuable, because it's almost like business coaching as well, not just in finance, but you've got such a broad knowledge around growing a business that people don't really realize that it's so powerful. So yeah, if you could share a little bit about your role.
Yeah, and there's a difference between accountants, bookkeepers, and CFOs. So the best way to describe it is that accountants and bookkeepers deal with the past, but CFOs, fractional CFOs, deal with the future of the business, like really in the strategic planning and where do we want to be? How do we get there? Are there any roadblocks and all that type of stuff? And with the bookkeepers and accountants, and you said that right, accountants usually deal with taxes. Bookkeepers deal with the transactional work, making sure that you have that foundation, which is super important to have, that you have all the financial transactions in, your invoices, your payments, anything that's happening in your business transaction-wise needs to be accounted for properly, because if it's not, then you're not going to be able to take that data and make decisions on it. And the fractional CFO, the one that comes in to help you with the strategic planning, to help you with the mapping the future of your business, we're not going to be able to work with you if you don't have that foundation, right? Mm-hmm. And the reason why we're called fractional CFOs is because CFOs are nothing new in even large businesses. I mean, they're a part of the business. They are in charge of finance department. They're in charge of the accounting departments. They don't have bookkeepers in big companies. Accountants do that type of stuff or work, but they also are pretty expensive. Mm-hmm. And but with small businesses, you do not need a full-time CFO, because they're, like I said, they're too expensive. And on the other hand is there's just not enough work for a CFO to be there full-time unless you reach like multi-million dollars, 50 and above. That's where the fractional CFO comes in, that they're just for a fraction of the time, temporary time. I come in, for example, on a monthly basis. I have calls with clients based on the need that they have. So I'm not there 40 hours a week because they don't need me 40 hours a week. I'm just there for a fraction of the month.
Yeah, I love the name. So let's say you're speaking to a potential client here. They're like, you know what, I just need you to manage, not just manage, but I feel like I've hit a plateau where I feel like I want to really grow, and I just keep on hitting the same thing, and I want to work with you. I guess what's the process that you would take with me from step one to the result?
Yeah, the first thing that I do is, obviously we get on a call. I listen what's happening in the business, trying to figure out and if this is a good fit, and then we would do a financial health check, which is an assessment of the business. And I have a framework, I call it the Healthy Financial House Framework. So we're looking at your foundations, we're looking at your accounting and bookkeeping processes, we're looking at how you're doing financial analysis right now. A lot of people that I work with don't have that. How are you actually looking at the numbers? Are you getting any insights? What are the reports like? And then what are the systems and processes that you currently have in place? And that's really important in terms of efficiencies and saving money and making sure that you're really getting the most out of the resources, not just, in terms of cash or equipment, but in terms of the human resource as well. That's a big component in the business. And then looking at it from the planning perspective, do you have the budgets in place? Do you have the KPIs, the key performance indicators in place? How do you know you're doing well? Where do you want to be? Do you want to sell the business? Do you want to, for example, grow it into a multi-million-dollar business? How do you really get there? So putting that in place. And then the fifth part, which is unfortunately really missing in small businesses, is the internal controls. Figuring out what are some of the safeguards you have in the business so that people unfortunately can't, take advantage of you or steal from you. And that's a real missing piece in small businesses. And really looking at the business from all these 5 angles and finding the roadmap that it's going to get you to where you want to be. And that's the financial health check. And after we have that in place, then we figure out how do we get there. And then I help them on a monthly basis to get there.
So comprehensive. I feel so safe and secured hearing your service that you offer to the client. So what's the best way for them to get in touch with you?
Yeah, the best way is you can either find me on LinkedIn under Kathy Svetina, or you can go to my website, newcastlefinance.us.
Awesome. Well, let's leave with the audience with one key takeaway that you want people to know.
Just plan for your business.
That's true. So it comes down to know what your goal is and then have a plan on how to reach there rather than just blindly, every day looking at your bank account. Well, thank you so much, Kathy. I learned so much and really appreciate your time today. Well, thank you so much for watching, guys. If you enjoyed this video, put a thumbs up. Now, if you have any questions for myself or Kathy, leave in the comments below. And if you like videos like this, we have more over here for you.